Good morning. It's Dr. Bill Williams coming to you live from Atlanta, Georgia on the Influencers Podcast. Welcome on President's Day. We have a very interesting show today. Rob Misheloff from Las Vegas, Nevada is going to join us in a moment. He is the president of Smarter Finance USA. Rob, welcome to the Influencer Podcast.
Thanks for having me, Dr. Bill.
Yeah, it's so good to have you in, and thanks for joining us on a Monday. Every day that we get to do a podcast around the world, 195 countries tune in, and we're just looking forward to showing you and your business off today to our audience.
Wonderful.
You know, we got to talking quite a bit earlier about some of the things you do, and you have an interesting take on business and refreshing, I think. Tell us what happened, how you got going. What was the real situation that got you into the finance business?
So in this current business, I used to own a direct mail advertising business, and direct mail doesn't work so well anymore. We found that out about 10 years ago when that business started floundering, and an ex-employee of mine was shooting hoops with another employee, a current employee, and had gone to work for a company that does what we do today, which is equipment financing and small business loans. And he said, "Well, how do you guys get your business?" He says, "Well, they just send out a bunch of mail and the phone rings." And I said, "Well, that is what we do. Maybe we can save our business." And so I started cold calling everybody, all the larger companies in the equipment financing space, and got to know them and sold them some direct mail campaigns. And through that process, I found out that they weren't exactly, and let me back up because I don't want to say all of them, but many of the folks I spoke to weren't being honest with their customers. They would be disingenuous about the rates and the terms involved in getting a small business loan or financing a truck or financing a piece of construction equipment, because they knew that guys that get their hands dirty weren't exactly finance experts and couldn't readily figure out, well, what is the interest rate. And so they just tell them anything. And that didn't sit very well with me. I didn't want to spend the next several years helping a bunch of thieves rip off small business owners. And since that pretty much put me out of the direct mail business in this vertical, I decided to start a website and start a company where we could give small business owners all the information they would need to make a smart business decision about whether equipment financing was right for them and whether equipment financing with us was right for them, regardless of whether they did it with us or not. Because ultimately, if you're helping people, I always felt, and we've proved out that in the long term, you'll attract the right sort of people and keep those relationships.
In our company, on Passive, we have a common saying is we're the correction to the corruption. So It sounds like you've got some of the same DNA that we have, that you want to see the little guy win and not be taken advantage of by the big companies.
Yeah, that's absolutely right. Or the small companies. It's interesting in our space. A lot of the bigger companies will they'll start out being pretty gangster, and then they'll get acquired by a bank, and they have to stop being so gangster because there's lawyers looking over everything that they're doing. And in fact, the smaller the company, the more under the radar they can be. But whether it's a big company or a large company, other financial, verticals like mortgage or insurance are highly regulated because they deal with consumers. So if you lie to people, well, you can end up in jail. In in the small business financing world, it's very thinly regulated and it's very hard to litigate because often the amount of money someone's getting ripped off for is so small. You know, it's $2,000 to $5,000, which doesn't sound like a lot. If someone rips off a company of my size for $2,000 or $5,000, you know, it's my fault because I didn't have my lawyer look at something. But not all companies are that. In fact, the vast majority of small businesses are mom and pop shops, and particularly the folks that are going online to, you know, finance a used garbage truck or something. And that's a business a lot of times that losing $5,000 or $3,000 to some crook is really a big deal.
Yeah, I think you've got something going there. Honesty is the best policy, and you pretty much preach that. You build long-term relationships with your clients.
Absolutely. I mean, we have, um, you know, we have one of these fancy CRMs that can tell us trends and so forth. And we have a lot of folks that are coming, and we call it in our CRM, it's called a schedule. The first time someone finances with us, it's a Schedule 1. The second time, it's a Schedule 2. And we've got a number of folks where we're on Schedule 9 or Schedule 12, and they just keep coming back to us and coming back to us because they know we're not going to lie to them. And they know that we're not going to rip them off. We're going to give them a square deal, and they can feel comfortable coming to us without having to worry about what they're getting into.
Okay, I do understand that. Repeat business in the dental business, the repeat business is our whole key. The lifetime customer value is much better than the one-time win.
Oh yeah, it's much cheaper to keep I mean, our cost to customer acquisition is, and we track that religiously. I'm from the marketing world, right? So I know my cost to customer acquisition, and what we spend to get a new customer in this business is $993 on average. At least that the last 12 months, it was $993. And in general, in this business, it has cost us an average of $1,000 to get a new customer. It's much easier to, you know, market to your database and keep your past customers happy and make sure they're not saying bad things about you and so forth.
Well, it sounds like the dental business and the finance business have a lot in common with that. Tell me about the greatest failure story you have, and how did you learn something from that really serves you well today?
Well, I mentioned before that the way I got into this business was because I was in a failing business, and that business wasn't always failing. I it was a wonderful business while it lasted. A partner and I had a business doing direct mail campaigns and a few online campaigns, but it was primarily direct mail campaigns to a specific vertical market, which was the reverse mortgage industry, which is the product where older folks can get a reverse mortgage and they don't have to make a mortgage payment as long as they stay in their home, which incidentally is a great product and something I always believed very much in. Once smartphones came out, it became much more difficult, and it happened slowly, but it became more difficult to acquire customers using direct mail. And at the same time, online advertising was growing tremendously. And that was a difficult lesson to learn, because in the mail business, once you're established, you don't really have to work. Your customers buy from you again and again and again. And, my partner and I were working 25 hours a week, and it was really great. And then one day the checks just stopped coming in. And we went several months without taking paychecks. And it was clear that we didn't really have a business anymore. And it can happen overnight, where all of a sudden you go from basically being on the top of the world to, well, I gotta sell my house in order to pay my bills, which is what happened to me. We I exited that direct mail business, because I couldn't make a living at it anymore. And in order to start my business, I needed some money. And we had this big, beautiful house in San Diego, California. And I had to put my sales hat on, because I had to convince my wife that we needed to sell that big, beautiful house, because otherwise I was going to have to go get a job. And I learned by the last time I had a job was I was 29 years old, because I was never actually able to keep a job. And that's really what drove me to entrepreneurship. I am not a person that's good at listening to other people, especially if I don't agree with those other people. And so that just wasn't going to happen. And so what I learned is, number one, just because you know about something, because I'd been doing direct mail for 10 years, and I had gotten to the point that I was very, very good at it. And I had to learn something new, because I had to essentially take a crash course in how to get customers online, which meant learning, well, how to put together a website, and how to write a blog article, and how to put a call to action in that blog article, so that the person reading that article might turn into a customer. And then once that person calls you, because I put all the work up front into putting together the marketing machine. And 10 years ago, because I started Smarter Finance USA in 2014, well, I started getting these calls, and I had never actually done a loan or a lease on business equipment or on a truck before. And I figured out pretty quickly I really had a lot to learn, and it was a trial by fire. And then figuring out, oh gosh, like, well, what do you actually say to these people? Not only, well, what is the right thing? What is making sure you're not telling them incorrect information, but what's the way to couch that conversation where you're talking to the person about their actual business and determining, well, is this right for them, and what are the potential benefits, and what are the potential pitfalls? And anyone who's gotten into a business or an industry that they know nothing about in the past can relate that's kind of like drinking from a fire hose. It's a pretty steep learning curve and a pretty challenging wall to climb. But I did recover from that after a few years of basically running around with it like a chicken with its head cut off. I brought in a business partner, whose name is Chet, and who had 20 years experience doing the actual business side of equipment financing, so that I could focus on what is my actual competency, which is marketing.
Sounds to me like you overcame technology change and disruption of your business from direct mail to online marketing pretty well.
Well, I hope so. Uh, it was a challenge, and
Learning on the job, though, that's not easy.
yeah, and believe me, I'm no expert. I'm
As
still
you look
learning.
at as you listen to people and you see them in your business, give us some hints about people that take out loans, since that's what you do. What makes those people fail if they're taking out a loan and they're stressed out over paying it back, maybe? Or what's your experience? Why they fail?
Well, it's interesting because in the equipment finance world, we aren't always looking at a business's cash flow, believe it or not. In fact, if when you're dealing with very small businesses, the less in our business, the less documentation, the better. The vast majority of the deals we do are what's called an application only deal, which means and up to a certain dollar amount, and it depends on the industry and it depends on the lender, but up to a certain dollar amount, you're going to see that nobody looks at anything but what's the person's personal and business credit, if they have any business credit, because a lot of folks don't. And getting into their first truck will be the first time they're establishing business credit. And an interesting statistic I'll share with you is that for instance, in the trucking world, 40% of defaults are due to equipment breakdown, meaning somebody has purchased a used truck or maybe even a new truck and it's out of warranty, and there's some sort of repair, and they don't have enough money to make that repair and still have adequate working capital. So so that's actually the number one reason why a business defaults. And of course, when you give your truck back to the lender and your single truck uh, company, I mean, you have just failed in business, because if you don't have a truck, you don't have a business. And so number one, not having adequate cash reserves, because and which leads us into number two, which is planning, because if if being in business and being a just a person, or in many ways can be the same thing, because if I'll hear people say, well, I had a surprise car repair. And as somebody who, I've got some gray hair, so I've owned several cars by now, you're going to have a car repair. Your car is going to need tires, or you're going to need a transmission, or you're going to need brakes. Um, Now, with a car, it costs a lot less than a truck. If you're talking about a Class A truck, a simple repair um, might cost $10,000. But if you've been in trucking for a while, you know that having a repair is a certainty. It's just you don't know the timing of the repair. So you should always be putting a certain percentage of your revenue into some sort of a reserve, so that you have that money there. Um, the other thing we see, so that's number one, is not having adequate reserves. Number two is not planning, because no repair should be a surprise. And the number three thing, and we kind of see this a lot, is growing too fast. Because when you grow too fast, and you'll see this, we had a customer maybe 2 years ago. It was about 2 years ago, and they kept coming back to us every 2 months for new equipment, because they had, as many contracts as in their area. They were in a hot area, and so they just kept on getting more and more and more equipment. Well, that's just adding to the monthly nut that you have to cover. And when you do that too fast, there's a difference between profit and cash flow. And if you're not managing that properly, Number one, because you have, all of a sudden you go from 2 pieces of equipment to 10 pieces of equipment, and your outflow just in payments on those equipment is going from, $4,000 to all of a sudden it's $50,000 a month, and you haven't had adequate time to really grow your balance sheet in the meantime, particularly the cash reserves on that balance sheet. And when you're on the hook for, $50,000 a month in loan payments and, another $80,000 in payroll, one little hiccup in your business, because again, you're growing that fast, you're not putting aside $1 million in 3 months. That's just unrealistic. And so we've seen that too, where you really, and it's interesting. Most very small businesses, they're not working with a financial professional to help them. Obviously, they don't have a CFO, and they don't have somebody helping them do a pro forma. Because if you're not doing a pro forma where it's not only looking at the net, but flowing it through to the balance sheet. What is this going to do to my balance sheet, and particularly the cash on the balance sheet? It can be a real issue.
You've laid out some pretty good gems for us about what people do to not be successful. So thank you for doing that. And I want to know what motivates you internally to keep doing, helping these people. What's your main motivation?
First of all, it's fun. In a lot of business, like if I sold, and I wouldn't ever do this because it would be boring to sell something like printer ink or photocopy machines, right? Not. I mean, you could do that, and people make a ton of money doing it, but those are great businesses. I don't know about the copier thing anymore, but there's a lot of businesses that are you just make a bunch of money, but you're not really sure how you're helping people, right? In both of the businesses that I've been in the past business that I mentioned, we were doing 2 things. Is number one, we were helping folks do advertising so they could bring in dollars to their business and achieve their dreams. And so that part was cool. And then secondarily, we were helping them sell a product that I really believed in. Like I would listen to their phone calls with their customers and hear how that reverse mortgage was helping folks, for instance, not have to choose between food and medicine. So we could feel pretty good about that. In general, like we're not only helping people grow their business, but the people we're helping grow their business have a business where they're helping other people. In my current business at Smarter Finance USA, we're helping people either start their first business, and this is powerful. Is a lot of time we'll talk to somebody that's working for somebody else, and they're making, $50,000, $60,000, $70,000 a year, and we'll work out numbers with that person. Well, what is it going to look like once you get this equipment? And a lot of times right off the bat, they're doubling their income, let alone, you go 5 years. I'm sorry?
Yeah, that kind of brings up a question. What are the top 2 or 3 types of loans that you give out that cause people to be able to double their income, like you just talked about? And what are they buying?
All sorts of things. Right now, trucking is a little soft. In the past, a lot of times it was a sleeper truck, something that they used to haul goods. And we're seeing less of that right now. Right now, construction is hot. And so there's a lot of folks that are buying either an excavator or what's called a skid steer, which are those bobcat machines that you'll see on a smaller construction site or bigger construction sites too. Cement trucks, we do a ton of, and you know, we'll see folks go from making $60,000 a year working for a concrete company to making $150,000 a year, and they're doing the exact same thing, just under their own name.
So you're saying people will own their own truck and they'll build a concrete company for the time, and they make twice as much as if they work for them.
Absolutely, absolutely.
All right. Well, that's an income center that I had never thought about, but I know a lot of people have concrete trucks rolling through their neighborhood, so somebody's making money.
Yeah, absolutely.
Do you have any particular motto at your company there, Smarter Finance USA?
We do. We say finance smarter, not harder.
All right. Why would somebody choose your company over another one?
Well, it depends, and we tell people that we're not always the right choice, and that's really true. And it's important because somebody who thinks they're always the right choice probably is always going to be the wrong choice. So it depends, right? We're not always, depending on who we talk to, maybe they should buy from us and maybe they shouldn't. One thing I can guarantee you, when we tell somebody something and they may or may not like what it is we have to tell them. I mean, we may have to tell them, your rate or your payments aren't exactly going to be where you like. Or we may have to tell them, I'm sorry, but we cannot get you approved for the financing that you want. But what I can promise is that anything we tell those people will be the truth. And that, I think, is pretty important. I mean, we're a broker, we're not a bank, and so we have several different programs. In fact, we have one of the things we try to do is have more programs than a lot of our competitors. And so we've got 30 different lenders and 100 odd something credit portfolios. So if there's a way to make somebody's deal happen, we're going to find it. But for example, as I've mentioned, we tend to deal with smaller businesses. An IBM type company, there's folks that help those type of businesses and specialize in those type of businesses. And we technically could do a deal for a very large company, but we'd probably tell that person, you need to work with somebody who's better at this. It's kind of like, a heart surgeon could remove a gallbladder, but that's not who you want to remove your gallbladder. And just being honest with folks about those sort of things is probably why a lot of people choose us. Is we're gonna know who is good for us and who's not, and we're going to verbalize that.
So your ideal client's pretty much a small business, a startup guy.
Yeah, not necessarily a startup. We do quite a bit with established businesses too, but we tend to in finance. There's we grade credit just like you grade kids at school, right? You've kind of got A through F financing, and we don't do. We're kind of in the middle. We're your A customers. Again, we can do, but they're usually going to get a better deal at their bank, or a better deal. For instance, if they're buying brand new company where they've been in business for, call it 15 years and have established business credit and good personal credit, we could do that deal, but they're usually just going to get close to free financing from the dealer. We tend to stay out of the really subprime type business because the rates are so egregious that we don't feel like we're putting people in a good position. So our ideal client is a small business owner who needs equipment, who's probably somewhere between A minus, just barely below bankable, down to kind of like a C, where the deal is not perfect, but we're not going to have to quote them a payment that we're going to be embarrassed about. Put it that way.
Are most of your equipment loans the default? Are they mostly going to be covered by the equipment, so you're not going to lose out yourself?
Well, we're a broker, so we technically, I'll tell you, we don't, unless it defaults in the first 90 days, we're typically not liable for any of that. But default rates, I mean, they're higher than consumer default rates by about 3x. And in fact, I'll tell you a statistic that will surprise you is we had one of our C lenders come do a site visit, and they said to us, you guys, your default rate is running at about 24%. And we said, wow, that's terrible. We didn't realize it was so high. And the business development representative said, no, that's actually pretty good. You're one of our best brokers in terms of performance. This is higher rate financing, and we expect that. That's why we have to charge a higher amount to cover the amounts that are going to default. And with that said, I mean, it is a secured loan. However, what you'll find is two things. Number one, what somebody pays for that at a retail price and what it goes for at auction are two very different things. And you have to pay for repossession, you have to pay for storage, and you have to pay for remarketing of that asset. So, for example, if somebody borrows $70,000 and the deal defaults early in the contract, lender's lucky if they get $35,000 when all is said and done. And I mentioned earlier in the show that 40% of defaults are due to equipment breakdown. So, if you've got, not only is the equipment worth half before worrying about repairing it, now the equipment's got a $10,000 or a $15,000 repair on it. So it's not quite as secured as you might think.
Yeah, that's the interesting statistics that certainly we wouldn't be aware of. Something to think about. What about your product itself? What do you actually sell? What is your service?
Well, we sell. It's
like
pretty simple. Yeah, we sell financing. We sell. I mean, we do a very small amount of what you might call working capital loans to our customers, but it's certainly not our core business. Our core business is helping people get assets for their financing for assets for their business, whether it's a lease or a loan or whatever structure that is.
Do you have many of your clients that are brand ambassadors who refer other clients to you?
So yes, well, two things is we do, we'll probably 10% of our business on a monthly basis, and we track this religiously. Roughly 10% of our business on a monthly basis is customers that have been referred by other customers. And another 70% of our business, so 80% total, is referral business. 70% of our business is referrals from what's called a vendor, somebody that actually sells equipment. And one of two things. So you might have a vendor that sells, and it could be anything, call it MRI machines, right? We do a few of those. And that person doesn't qualify for, like, and a lot of the medical programs, they will have in-house financing. Um, but not all of their customers will qualify for in-house financing. And if they don't qualify, and that's called instantly captive financing, if they don't qualify for that, the seller of the equipment still wants to sell that equipment and make that revenue. So they're going to refer them out. I mean, some don't, but that's not a very smart business move. They're going to refer that customer out to a company that they trust to take care of their customers. And smaller equipment sellers, a lot of, like, if you might drive around town and you'll see, like, for instance, a restaurant supply store, and they sell all sorts of kitchen equipment. And those very small equipment sellers, they won't have any sort of in-house financing because they're not Kenworth or something that has dealerships all over the country. And so they absolutely are going to deal with a company like ours. It may or may not be us, but because nobody walking in to spend, but I shouldn't say nobody, but very few people walking in to spend $100,000 putting a kitchen into their restaurant is just going to write a check for it. That would be, in most cases, not a very smart business move.
Well, let's shift focus now. And Rob, I want you to talk about what you're grateful for today, being that you're in Las Vegas.
Yeah. Well, I'm grateful for quite a bit. I get to come into work every day, and I get to feel like I'm helping people. So that's a good thing. I've got a wonderful wife, two wonderful daughters. I'm in Las Vegas, so when I'm not working, I never run out of things to do. But hey, I'm alive. Every day above ground is a blessing.
So where do you go in the summer when it's so hot?
Into the pool. Yeah, in the summertime, we'll typically get a couple of weeks a year where during the daytime it's 115 degrees, and you're either inside or you're in water.
I've been there during that 115-degree weather, and it's like stepping into an oven.
Yeah. Believe it or not, you get used to it. We moved the business to Vegas about 7 years ago, and it's gotten to the point where my cutoff is about 112. Anything below 112 is pretty comfortable.
Those are some strange numbers for some of us.
Yeah, absolutely.
Tell us how you start your day out there. What time of day do you get up and start going?
Well, so we're obviously on the West Coast, and most of our business is Central and East. So the business we open at 7 a.m. So I get up in the morning, and fortunately I don't even live 10 minutes from the office. So I'll get up around 6 o'clock in the morning, grab some breakfast, drop my dog off at daycare so she's not bored all day, and I'll get in here usually about 7:15 because her daycare doesn't open until 7 a.m.
Gotcha. So if you're looking at a challenge, how do you overcome that challenge?
Well, it depends on the challenge, right? But it all starts out with a plan. Whenever you have something that's challenging, the first step is you sit down and you write out, what am I going to do about this? I'm always surprised at the number of people that just kind of try to wing it. I mean, even with a plan, you're not always going to be right. But at least you got a fighting chance.
If you have a plan to achieve your goal, What's your goal going to be?
Well, that's a good question. Well, can you define that a little bit more for me?
Like, I mean, you're doing the financing business.
Sure.
Do you have a plan to increase the size of the business, increase employees,
Oh,
offer options to more variety of customers?
absolutely. So our current goal for 2024 is to increase revenue by 30%. And the way we're going to do that, in fact, we just brought in last week director of business development that we have very high hopes for. But yeah, in fact, we have currently 12 salespeople on the floor that are seasoned. We just hired 4 more that started 2 weeks ago. Now, in sales, if you hire 4, you're lucky if you keep 2. That's just the way that side of the business goes. But we actually have plans throughout the year, every other month, to bring in 4 new salespeople until September, so that we'll increase the size of our sales team by 50% this year. But they're not, a new salesperson is not going to sell as much as a seasoned salesperson, obviously. And again, we hope that will, and whenever you are performing things, you hope it's going to work out the way you planned. What I found is the longer you've been doing it, the closer your estimations are going to be to reality. Because when we did it, these business planning 10 or well, call it 8 years ago, we'd model something out, and what would actually happen would have no relation whatsoever to what was on our spreadsheets. And now it's getting closer and closer as we kind of have more of a handle around what are our actual metrics and what are the actual KPIs in our business.
I always ran my business on KPIs, so I understand, management by statistics and all. Here's a question. How much revenue do you expect a new employee to bring in?
Well, a successful employee, they have a quota of $300,000 in revenue per year, and we expect it to take 18 months for them to get to that level. The first 3 months, obviously, we're losing money on that employee. But ideally, a first-year employee would bring in about $150,000 in revenue during their first year.
In the dental business, we track that quite a bit. And, your average dental practice, it was $100,000. A superior dental practice was maybe $250,000 per employee.
Okay.
So, every industry has their averages. So
yeah,
it's interesting what you say, but we always look at the size of a team, a staff, and get an idea of gross revenues just by how many people were there, multiplied by the level of excellence that the team had.
Sure. We find the 2 KPIs that we have. Number one is it's when you count everything, right? Because for each employee, there's the amount you have to pay for their marketing, the amount you have to pay for all their software and all that other stuff. You have to pay them, and then you have to accrete some amount of overhead, right? Because the operations staff isn't free, the rent isn't free, the power isn't free. And we find that the break-even number is about $13,500. If that employee cannot bring in, and of course in the first several months they're not going to do this, but if within 6 months they're not bringing in $13,500 on a monthly basis, we're losing money on them. And the 25,000 is where they turn very profitable, and we want to keep them for the rest of their natural life.
Very good statistics to know. Lead generation, is that a big part of your need then?
It is.
Qualified leads.
Yeah, absolutely.
So thinking about advice that you would give, if you're 20 years old, you're looking back at starting over again, what would you give yourself advice to do?
Um, well, it's interesting because I had this exact conversation with my wife about a month ago, and I wouldn't do anything differently. And here's the reason why. I made all sorts of mistakes in my 20s, like every mistake you could possibly make. And I mentioned that I got fired from pretty much every job I ever had. But the truth is, had I and everyone's different. And I look back at me just out of college at 21 or 22 years old, and I thought I knew everything, and I knew absolutely nothing. And me having started a business at that age, I guarantee you, I didn't have the maturity, I didn't have the knowledge. People get out of college and think they know stuff. They know absolutely nothing. Um, somebody who's 22, who's been working in the trades for 4 or 5 years, is in a much better place to start a business than someone just out of college. So I spent 7 years in various jobs. Um, Basically, I felt like I was spinning my wheels. But the truth is, the experience I got from those jobs um, gave me the foundation that I needed to later go into business. And I wouldn't tell myself do different jobs, and I wouldn't tell myself do same jobs, because the road is different for everybody. Just do something, and do something to the best of your ability. Because even though I didn't get along with folks in my 20s, I went and I did everything I could to try to be successful. I was doing the wrong things, but I was striving to be successful. Um, and if I had to do my life over, I'd probably make all the same mistakes.
Well, it's refreshing to hear the honesty that you were hard to work with, that you failed in a lot of jobs because you just weren't the ideal employee. You had to learn that you were the entrepreneurial type, that you had to run your own company. And
Yeah,
people never understand that, but that's true. Being a dentist, I was an entrepreneur. I always ran my own company up until the very end when I sold it and worked for about 10 years for somebody else. I always worked for myself. So I understand what you're talking about.
sure.
Tell us what you want to be remembered for when it's all said and done, Rob.
It's funny because most of us aren't remembered. The truth is, and incidentally, I'm not in any position of power. My business is small. We've got about 20 employees. I'm not a Walmart. Um, and I'm not in politics, and I'm not on television or anything. And I can tell you, I know nothing about my great grandparents. I kind of wish I did. I know some very vague facts about them. And humans have been around for who knows how long, tens of thousands of years, and 99.9% of them aren't ever going to be, like, they might as well have never existed. And I think understanding that is kind of a key to happiness. We're going to be on this earth for 80 years if we're lucky, maybe a little more, maybe a little less. And most of the stuff that makes us have a bad day in the long term doesn't really matter. So do the best you can to be good to the people around you, and no one's going to remember them either. But be happy and make other people around you happy to the best of your ability. And no one's going to remember me.
Interesting take on life. I was looking at something today on the internet as I was up and reading, and it was a question. It was asked, "What do you do at 70 years old?" I happen to be 73, so I kind of keyed in on that question, like, oh, I better read this.
Yeah.
And the interesting answer was, you don't worry about the past. You just look to the future. Don't reminisce over what you used to do, your failures or your successes. Look
Sure.
forward to the future, because that's the best days of your life.
Yeah. Yeah. I like that.
Tell us how we can support you. Give us a link to be able to get to the Smarter Finance USA.
Real simple. It's just smarterfinanceusa.com. And we're on, like all business, well, like most businesses, we're on all the socials, LinkedIn, Facebook, Instagram, TikTok, and so forth.
So if I want to buy me a bulldozer, a Caterpillar,
Yeah,
I come to you and you'll finance it for me?
maybe we'd have to take a look and
Creditworthy. Gotta be creditworthy.
yeah. Well, we'd have to ask what's a dentist or a podcaster doing buying a bulldozer, because that would be a key question for an underwriter. But
I want to play with it. I want to dig in the dirt.
well, it's probably not going to make you very much money, so they probably would say no. But if you wanted to buy some podcasting equipment, then we probably got a deal.
There you go. I like the answer, though. Honesty.
Yeah.
Looking at what can you do with the equipment you buy. Now, if you sell me a dental chair, I can make some money for you.
Well, yeah. Well, we'd be happy to finance a dental chair then.
That's a good business. There's a lot of money in dentistry.
Yeah, you got to be smart though. You got to get through dental school.
Well, yeah, there is that.
Yeah.
I started out and equipped 3 rooms of equipment and the build out for $54,000 in 1975.
Wow.
Now, 1 room of equipment costs over $50,000.
Oh yeah, yeah. Well, I'll tell you this. Every time I've been to the dentist, and mind you, I take care of my teeth. My teeth aren't rotting out of my mouth or anything. But there's been a few times during my lifetime where I've gotten, hit with whatever, $3,000 or something, because they had to do something where they broke my roots and filled some stuff in. And I remember leaving going, well, that took 30 minutes. I wonder where that $3,000 went. But the truth is, well, number one, you're paying off the dentist is paying off his dental loans. You got to pay for the equipment. You got to pay the insurance. You got to pay for malpractice and all this other stuff. And so, just like everything, when people say, well, why does it cost this much? Well, there's always something you don't know.
A lot of cost involved, isn't it?
Yeah.
What would you say about being on our influencer podcast today?
I'd say it was a lot of fun. I enjoyed talking to you. You seem like a really nice person. And it was great. I'd recommend anyone watch your show.
Thank you very much, Rob. We enjoyed your take on small business, working with the guys that are starting up, and it's just a nice, interesting conversation. I had a good time today. Thank you for doing all this. I want to give you the final word, and I'll come back when you're done.
Well, thanks for having me again. If you're interested in financing equipment, we're at www.smarterfinanceusa.com. And again, it's been a pleasure.
All right, there you have it. Rob Misheloff of Smarter Finance USA. Get your financing done at the best shop I know. We have a QR code up here, Rob, that people can click on to find out where the podcast will be housed, and it's going to be at this location here at drbillwilliams.tv, the website that holds all the influencer podcasts that we do, 150 of them. And you'll also find out more about our AI technology. I have things to give away that I want to share with the audience. If anyone's watching that they would like a URL shortener, a customizer, so you can make a custom URL like I've done here, make a QR code. All that is done with Trim. You can have that for free if you log in and check it out. And the QR code is very actionable. In other words, it'll track whoever is coming in and tell you all about the connection. Is one of our products like Tracker, a more advanced tracking device for websites. And our number one product is Connect, which is a video conferencing software. So you're going to hear more about Connect in the future. It's begun rolled out to the commercial level in a couple of days. And it's one of the most advanced audio visual conferencing packages out there. So letting people know about it now, and when you see it, you're definitely going to want it. It'll be taking over the industry pretty soon. Rob, thank you for being part of Influencer Podcast.
Thanks so much for having me.
And it's been a real joy having you on today. You guys in the Influencer Podcast world, come see us again later on this week. We're going to have more interesting podcasts like Rob, and we'll see you soon. Take care.